Good day. Ira Epstein with your financial market weekend wrap-up, and this is for Saturday. It's unusual I do them on Saturday, but I might even move there. I don't know. Saturday, June 27th, 2020 at about 5:55 p.m. Central Time. As I told you on Friday, I had hurt my leg, and I couldn't even stand Friday afternoon to do my shoots. So when that happens, not much I can do. I've never done it this way. I don't mind it. It's sort of interesting. So let's talk about what the financial markets are going to focus on this week. I want to give you the one key word, COVID-19. The case shoot-ups are now starting to make the parts of industry in California, Texas, Arizona, Florida, talking the service industry, the restaurants, the bars, the leisure industry, starting to feel the pinch. Florida just announced that in Miami Beach, they are going to close the beaches for several days around July 4th to stop crowds. They're stopping drinking in bars. Can you imagine what this does in places like Florida? Texas? I mean, I can't imagine it, but for all purposes, the restaurants are staying open, but the bars are shut. I don't know what that does. Why? You don't have to read too much through it. We saw Vice President Pence and the COVID-19 team explain it as best as they could. It's millennials. Millennials go out, they get into these crowds, just look at the videos you see, and there's a large portion of them not wearing masks. They then get COVID-19, certainly not everyone, but some do get it. They bring it back to the elderly population. They can't handle it, and the numbers spike up. In addition, we're doing more tests, and as you do more tests, you're finding more cases. It's a mixture of everything, but the picture isn't good right now. So we've gotten out of this first phase of COVID a resurgence. You never did get into your next phase of it. That could come in the fall. And it's taking twists and turns. We're learning more about it, and it's not quite what we thought. It's worse than we thought. So that's weighing on the marketplace. Now, as we take a look at the stock indices for the month, you can see that we've got a pattern where we're made a peak here, and we're dropping back. For the week, we're down 35 points. Okay. We saw the first monthly correction back here that ended everything. And remember, when you go to monthly charts, they're big. We're still not through with the month of June. We have a few more days to go. But for the month so far, it's down 35 points. It can certainly rescue itself. Here's what I think got really ugly, and this is what you have to look at. If I take away this week's close, I think you'd agree that since March, you haven't had a break where you got under a prior week on a closing basis. Do you agree with that? I hope you do, because it's not there. You now did it. When that occurs, something has changed. So yes, we went up to our peak here just shy of the 3,200 level. We're backing off. It could mean that the market wants to back off into the support of the 2860 zone. Interesting. As we take a look at the next chart, and this is again the weekly chart, and we put on the swing lines, they are still bullish with higher lows and higher highs. Their pattern gets broken and turned bearish if you get under 29.35, which from here suddenly isn't that far away. It's roughly 70 some odd points. If the market's going to stay bullish, it should not take that out, and it should eventually get back to the 32.31 level. Where's the support come in the market? You know, I'm going to tell you it's right here at the 100-day average from 29.05 to 28.62, which means if you take out 29.35 to get to that number on a weekly basis, you will have not yet run into one of the main supports of a key moving average on a weekly basis. That's important. And again, it ties into that 28.62 level, which I like. When we look at Bollinger Bands, suddenly they've begun the process of dropping down and dropping down quickly. So even if the market tries a rally, they're going to run into a brick wall above the market. Yes, you can get above stochastics, but the first challenge of them when you haven't hit them for a while, be it to the downside or upside, that's resistance, be it upside and support downside. When I take a look at the momentum of the market, it is still pointing up. And this will be interesting, come Monday, if we're down hard, you'll start the process of having it roll over on a weekly basis. So the market on a weekly chart has not even entered the pause phase. It is still in the bull camp. It still has momentum up. the bias up, the swing line up. Everything starts getting unglued if you hit 29.35. When we come to the NASDAQ, bullish. You still have the pattern of higher lows, higher highs. The daily charts are not bullish right now. They've made the turn. For those of you that get my morning subscriber video, and that is important, if you get the morning subscriber video, you know that I give you a review at 5:40 in the morning. I'll talk more about that without putting up the ad behind me today, and I'll give you an idea what I do there. But to make your story short, you'd have to take out 93.8175 to break the pattern that's been in place since March, where we've had consistent higher lows, higher highs on a weekly basis. Take out 93.8175, and folks, I don't think that's going to happen right away. That from where we're at, that's still 430, 40 points away from here. You can see that's a long ways. It could happen, but because you were down 255 on Friday, and we're going to get, I think, more bad news when we open Sunday night, but we'll see it. In the Dow, the pattern will break if you get under this low right here, which was last week's low of 24,550. What that would do is put the market with lower highs, lower lows for a setup of a combination of the 200-day average and the 18-day, did I say day? 200-week average and the 18-week average of moving averages right here, and those numbers come in the 24,080 level. So that is going to be an important zone, and that can be hit too. So you've got to keep your eyes on what that does. Momentum here is already waning, so it's begun its turn. In the Russell, you turn out now bearish on any close under right here, 1296.50, but you break the uptrend again, and I use the word again because you broke it right here. And when you took out the high of an outside week, remember what I said, if you do that 1 week or the week after that, it's a trap for the bears, and it proved to be, and you can see how that market moved up, and what stopped the market was the 100-week average. Now, we've got a pattern where if you break down, you're going to break down just over that 18-week average, and that becomes a test, close under it. I don't know where you go on the downside. I don't know that you'll make it to that lower Bollinger Band, but it's something that could be in play. In the bond market, the bonds are very aware of what's going on. They keep looking at COVID, and all you keep hearing from all the Fed presidents, they're out and giving their speeches. The Fed is having a hard time trying to balance in what to do about COVID because it's not a financial criteria. It's a health issue, and they can't help you with the health issue. And you'll hear more and more of that coming on. If the market continues to rally, look for very stiff resistance up here at 179.31. Now, if we come back here also, that was the highest high before you had 2 weeks in a row. I keep saying days. 2 weeks in a row under a lower Bollinger Band that found its support at the 100-week average, but it was a downside breakout. I think it's been now nullified completely, and the market, that 179.31 becomes an important number. In the note market, get over 139.15 and you suddenly turn this market bullish, looking for wherever that upper Bollinger Band comes in. Now that number has been falling, as you can see, almost half a point a week. So it could be in the 140.10 area, something like that when we reopen Sunday night. Trend, if you take that out, turns up. Right now, while the swing line is down, the bias is what? To the upside, and momentum has gone flat. Remember, we don't get overbought or oversold on weekly charts and momentum the way that I teach it. In the dollar index, interesting point. You double topped this week. The week before, 97.70 was the high. Same thing this week. Now, if you take that out, you start another reaction to the upside. It wouldn't be bullish because you're under 9,900, so the bias is down. If the market's going to fail here, to me, that's the number it should not taken out. The momentum to the downside, as you can see, still pointing down. The battleground, the 100-week average. Do you agree? Yes, we had one slippage down to the Bollinger Band. You came back, but you've been fighting right there. That's really the fighting ground. Then if you go up, just like we hit the Bollinger Band here, I'd look for the 18 week average to be the next resistance point. The question is, does the market want to get there? And obviously, the question is, does the market think this is a U.S. problem, or is it going to spread elsewhere in the world? That becomes important. The EU thinks already it's more of our problem. They're about to, and they haven't done it yet, but I look for it to happen at any point, bar U.S. flights into the EU. Why not? We're breaking out in mass ways. I couldn't believe when I heard American is getting rid of the seats in between. You talk about not thinking things through. Come on, criticize them, folks. In the European currency, we can see that if we get under 111.89.5, we'll actually get a pattern of lower highs, lower lows. Would that start a real bear trend? Well, it would start one in the swing line, but not with bias. Bias has support at 110.22. If the market's going to stay really bullish, it's got to not get through that number, and then it can maybe get back to the 113.94 zone. In the Canadian dollar, we got down this week to 72.92, so we have an outside week down. Until this week's high, which was 74.16.5, is taken out, we have a pattern of lower highs, lower lows, countered by the market being over the 18-week average. When the two fight each other, I have no trend. Momentum going flat, not pointing up anymore. Japanese yen made its highest high of this move and then gave that up and closed 30 lower. Are we trending? No. You've got a lower low and a higher high, so there is no trend at work in this market. Bitcoin, we saw the daily charts go down to the lower Bollinger Band, hold, and come back a bit. On the weekly chart, we haven't done that. We have a lot of divergence here. We have higher lows, higher highs with momentum turning down. If you were to take out 89.30, you'd get a pattern of a lower high and then a lower low, calling for a challenge potentially of the 82.96 level. A close under that number would then be bearish. So what do the bulls want to do? Two things. If they can't support the market above 89.30, they certainly want to try it around that 82.96. Closing under that gets bearish. In Brent versus WTI crude on a weekly basis, sort of flattened out here in the 250 level. Now, we've got a market that's been fascinating. We peaked out on both the Brent and the WTI and gasoline prices when they hit this week the upper Bollinger Bands, and they fell sharply from that. I think you know that, and I've been talking about that, and I certainly do it in my morning subscriber video. You've got the pattern of higher lows, and with this week's high of 43.93, higher highs, momentum up. The trend is still up. The trend stops being up if the market hits 37.24, but it doesn't turn down. The most you could have is a higher high and lower low. When you come to WTI, it's very similar. You know, this chart, of course, got destroyed when you went down into a negative $40 area, the first time that's ever happened. And now how do you make up for that? Well, enough weeks have gone by to get new chart patterns. That's the real way you do it. And the pattern right now is higher high, higher low. Take out 34.36 and the market gets itself into trouble very quickly with a higher high, lower low pattern. We did get for Baker Hughes only one rig count was lost. So we're at that point with these higher prices that have come out where I think you're done with the cuts in wells that are no longer producing. And the question is, do we want to get more producing or get rid of those that don't produce so well and bring on new ones that are producing much more? That's probably a part of what's going on. In Rebob gasoline, maybe it's time for a correction. We're right in front of July 4th. The gasoline that had to be bought for the holidays, been bought by the wholesalers, being shipped past tense, to the necessary areas for distribution of it. We'll see what happens. And my guess is there's going to be a lot of driving over the holiday. Who the heck's going to get on a boat to go anywhere? Or as far as I'm concerned, an airplane. Even though they say the airplane travel's going up, I wish you the best sitting person to person in coach on American with the guy next to you taking off his mask, getting a cough. Enjoy yourself. So you put it all together, you see where you're going to get, and that's the hardest thing that you got to figure out. As I said, I start you off each morning with my morning subscriber video. I cover 40 charts. I'm able to cover at that point for you as well. I try to get you all the information out of Asia that I think are going to impact the market in the morning. Then I bring you up the European news and I post it right on the screen for you so you get a feel for what they're doing and the reports coming out generally from 6 in the morning until 9 o'clock in the morning. So now I'm telling you what they're expecting, what to look at, how the futures are reacting, and it ties in nicely to both the ETFs and what they're going to do, and you get to see how the market goes. How do you get this? It's so simple. Go to our website under the word research on the top. So you go to www.iraepstein.com, research on the top, let it pull down. It explains everything you need to know right there. I'm Ira. Saturday night. Maybe this is a Saturday night special. You have a good one. I'll see you all come Monday.